Good mortgage morning to you. My name's Jason Granum, and I'm your loan slayer for the day. You're watching the Economic Market Weather Report. The Dow is sunny and warm. We are in pre-market at this very moment, so you might be watching this after pre-market when the markets are actually open. But as we all know, pre-market does exist, and if you're watching your Dow futures like I've been, informing you about, you would have saw that the Dow has been creeping up since, late last night. And it's trying to hold on to a gain today. We are up about 230 points as we speak, still in pre-market before it opens. We'll see where it goes today. Not a whole lot of action on that side. They're trying to keep those gains. Now, notably about crypto, like I said, it's not a crypto channel. However, crypto, Friday took a bit of a nosedive almost across the board. I was looking at various cryptocurrencies and they all just took this dive. I don't know exactly why or what caused that. However, is that a discount? Did some people pick that up? They strike on that opportunity and now they're having a bit of a comeback. I mean, if you looked at crypto at this very moment, it's probably still going to show a bit of a negative. However, look at the graph, that chart. Crypto is creeping back. And, the Bitcoin is about 48,000 as we speak. But Friday dipped to 42. That's quite a ways off of where it was kissing that 70,000 number a couple weeks ago. But it's either a discount or it's continuing to nosedive. We don't know. I don't know. We can't predict anything. But what do you anticipate happening? I took a look at the buy ratio. Now, a buy ratio is how many people are buying versus how many people are selling. And that's something that you can see on most crypto platforms. And right now, Bitcoin is at a 75-25. 75% of the transactions are buys, and 25% are sells. So that's quite a huge gap. What that means is there's more people trying to buy crypto than sell it. And almost about a 3-to-1. Along with Ethereum, has the same chart pattern. Coincidentally, I don't know. Believe in coincidences? $3,500 it dipped to on Friday in that same dip pattern at the exact same time. And then, now it's crept up over 4,000. That's at this very moment. We'll see where it goes, but also has a strong buy ratio. It's hovering around 65% to 35. 65% buys, 35% sells. Again, that's quite a gap. And something to consider when you're analyzing and trying to anticipate what's going to happen in crypto. On the other side of the fence, the 10-year Treasury, that thing that affects our mortgage rates. Well, that, my friend, is up slightly. However, it's come down considerably. We are now under that 1.4 threshold. 1.38 to be exact at this very moment. Now, it's allowing us to have even cheaper mortgage rates. We'll see where it goes, but it's being very favorable to our mortgage rates. I think we could possibly see some movement here, but will the movement be up or down? I don't think it's going to sit on this 1.38 for very long. What's your opinion? Where do you think we're going to go, up or down this week? We'll see. Now, speaking of the 10-year Treasury, there's something called the 2-year Treasury. And I've touched on it in the past, but the 2-year Treasury is something that has been, I would say, making some noticeable movement. And it's been creeping up. And the 2-year Treasury, along with the 10-year Treasury, is an analytical measurement used in the economic marketplace to analyze inflation or deflation. and even more specifically, recession. Looking back on history, recession has been something that's been measured every time the 2-year and the 10-year have inverted. So there's something called the 2-10 Treasury yield. That's the difference between the 2-year and the 10-year. In fact, it actually has its own chart. When you're looking at that chart, you might say, well, that's not where the 2 years at, and that's not where the 10 years at. Of course not. It's the yield spread between the two of them, and so it's actually a measurement. And with the 2-year creeping up, and as of late, the 10-year has come down, you'll see an actual significant drop in that chart. What that's measuring is the difference between the two of them. So if the 10-year is at 1.38 and the 2-year is at 0.61, it's the difference between the two. The 2-year has been 0.16 only 6 months ago. If you look back on a 6-month chart on the 2-year Treasury, you'll see that it was down at 0.16. Well, there's quite a spike on that chart, and the 2-year has come up to now 0.61. Well, significantly, these reductions lately in the 10-year have brought them closer together. All I'm saying is it's something to keep an eye on, because that historically has been a measurement tool to determine where we are in the inflationary measurement, or are we headed towards recession, or are we headed towards inflation. That chart has illustrated in the past the recessionary times and inflationary times of our economy. So it's a great tool to keep an eye on and watch. And if you look at significant events on that chart, the 10-2 Treasury yield spread, you can see significant economic historical events. When they took place, there was significant changes in the chart, in its history. So it's a great tool. I track it. It became notable because we've had a considerable drop. In other words, these two are getting closer together. They're not close, but coming closer together is definitely something worth talking about and watching, as we are surrounded by quite a inflationary economy, and I'm not arguing that prices aren't up on a lot of things, producing a lot more economic pressures. However, watching that chart might give you some anticipation vision for the future. Keep an eye on the 10-year, 2-year yield spread, or the 10-2. Now, shaking up the New York Stock Exchange. Shaking up. Nobody cares. Nobody's going to care about the president of the New York Stock Exchange. Why? You're the only one. You're the only one that cares. Okay. All right, I'll do the bit, but you're the only one that cares. Now, I don't know who needs to hear this, but the New York Stock Exchange is shaking things up. At least according to CNBC, they use the word shaking things up. Lynn Martin replaces Stacey Cunningham as the president of the New York Stock Exchange. There you have it. The president is not the same president of the New York Stock Exchange. It's now Lynn Martin. Congratulations, Lynn. And Stacey Cunningham is going on to do something else, still affiliated with the New York Stock Exchange. I told you nobody cares. Well, you go back to your writing / think tank. write stuff that people care about, and then I'll report on it. You're the only one that cares about who the president is of the New York Stock Exchange. Just saying. Elon Musk, however, says no to hydrogen. Says hydrogen's bad and it doesn't make any sense, so don't make hydrogen cars. He actually thinks it's silly. And other companies, however, like Toyota and Hyundai, are looking into as an opportunity to build hydrogen-powered cars. The thing with hydrogen is it can produce its own electricity. However, according to Elon Musk, it's very complex and not practical to house, store, and produce hydrogen for these vehicles, let alone, it might be kind of dangerous. So there is a bit of a quarrel going on between Elon Musk and some other innovative car companies as well, and we'll see where that shakes out. Now, I don't know, could just go back to using ethanol. You know, back when we used to use ethanol, and then the Rockefellers said, put petroleum in it. That way they'll have to buy oil to run their cars. Might make us some money. What do you think? Is hydrogen a good idea for cars? Should we just go back to using ethanol because, well, it's cheap and environmentally friendly? Should we keep petroleum in it? Who knows? Anyway, electric cars are on the rise. Keep your eye on that market, the EV market. Very interesting market to watch. And for my writer's sake, can you leave a comment if you actually cared who the president of the New York Stock Exchange is? He'd really appreciate that. Thank you for watching the Economic Market Weather Report. My name's Jason Graneman. I've been your lone slayer for the day. And remember, it's not work, it's a lifestyle. Cheers. Maybe go back to working on that Christmas episode you keep raving about. If I keep telling them we're going to have a great Christmas episode and it looks like this thing, well, nobody's going to care about that either. Just saying.
Nobody cares! Nobody cares!
I guess if the president and who used to be the I don't... Look, who cares?